All right, everybody. Stocks by the numbers. Welcome back. Quick update here for DraftKings Incorporated, ticker symbol DKNG, listed here on the Nasdaq. I know we had a big move today here with the stock, and I wanted to see just where it closed. So I appreciate the fact this update's coming a little late, but overall, this is basically what I said anyway was probably going to happen with DraftKings. We had this initial drop after earnings here. We can see back in the beginning of August, the company gets up to 1.1 billion, slightly misses that estimate by 7.7 million, or roughly 0.7%. Nice beat on the EPS side. Stock drops down. We have bounce. We drop even further, sub 30, and then the stock just really goes on a tear and now gets back up to 40. And that's why I tried to mention in the Discord, and I tried to mention on X as well. Again, at Stocks by Numbers, since the whole name apparently doesn't fit. But I tried to say that, in my opinion, a situation like this, if you are in a position to build a position in the stock, sub 30, low 30s, give it some time, as you see, 6 weeks? Now you're up to 40. So this is why I always like to say that you find companies that you like, whether it's future growth potential, whether it's current growth of revenue, market share, right? They've been consistently beating earnings. You make a list, and then when stocks pull back for really whatever reason, right? This was the Illinois tax increase on gambling, and then they missed on revenue, right? Whatever the catalyst is to bring the stock down, if it's not really going to hinder future growth too much, then in my opinion, you can view it as an opportunity. Step in, buy some shares, start to accumulate, build a position, and then you give it some time to rebound, and boom, now it's back up above 40. But a couple of things here. So first of all, we had Flutter stock up big after FanDuel parent outlines growth plans and unveils $5 billion share buyback. So basically, the word on the street was that, well, if they're seeing such, healthy numbers and they're projecting record revenue, then chances are the sports betting sector is performing very well, and DraftKings is probably seeing some good action as well. So you kind of got the sector bump from what another company reported. But also at the end of the day, we crunched the numbers in the past, and we looked at, again, the growing market of sports betting and how DraftKings is positioned. And that's why a lot of people, for the most part, I'm sure if you ask them, are bullish on DraftKings. They probably wanted to own it. They might think about buying some shares. So this is a company that a lot of people are pretty bullish on. So probably only a matter of time before it gets back up to that trend line there in the high 40s, as you see, about 47. But I know we do have earnings. Let's see when next earnings are. Yeah, out in November, roughly, end of October, maybe, first few days of November. And revenue, again, estimates of about 1.1 billion, expecting a loss of 41.7 cents. So the company now, after this big run, the RSI may be a little overextended. Stock right now, after hours, 41.22, right at this 1-year fib level. And you can see that the candle here, big up, big down, and now we're back in the center. So that may be signaling that a reversal and a pull off, a sell off or a pull back may be due. And you could maybe come back down to this trend line here of about 38 and maybe like meet up with this 20-day as well, kind of readjust that RSI, and then maybe try to bounce back up into the 40s and kind of just hold that level going into those earnings. But of course, anything can happen. But overall, DraftKings, I know a couple of people in the Discord mentioned that they stepped in on these dips and they bought shares down at like 29 and a half, 31, 32. So obviously, they're up nicely now. The stock is above this resistance trend line going back to March 27th, connecting across those tops. And we can see that as we got up, we had healthy bounces and just continued to run up. So congratulations to all you shareholders who stepped in and bought that dip right there. Seems to be working out very well for you. Stock right now, market cap about 20 billion, if you will. EPS has kind of been hit and miss here. We have 2 beats, we have 2 misses. That annual growth, though, in revenue, absolutely phenomenal. just chunking up to these breakpoints, these milestones here. 600 million, 1.3 billion, 2.25 billion, almost 3.7 billion. So the growth really is phenomenal. And like they say, I know we're seeing a loss here, but like the saying goes, sometimes you have to spend money to make money. And in the beginning, I felt that DraftKings was overvalued because we were kind of sitting at this valuation without seeing these billions come in, right? And then once we hit these high 800 million billion mark, that's when I changed my tune. And now I said, in my opinion, it could be fair value. If you catch it down here in the 30s, it could be undervalued. You could probably catch, a run back up into the high 30s, low 40s. And a lot of the DraftKings trades that I mentioned in the Discord have been working out pretty well as well. But we can see that revenue now sitting above that 1 billion mark. So that's probably going to bring in over 4 billion now for annual revenue. And the stock seems to be consistently on the up and up. Let's see if we have any recent news here. Growing duopoly. Price target maintained $60 a share by Needham. This is what we looked at last time. We looked at what a lot of analysts were saying. And for the most part, everyone seems to be pretty bullish on it. DraftKings faces Major League Baseball lawsuit. Usage of players' names, images. Not merely information, as promotional. I don't know if that really will be an issue, because I'm pretty sure they've been doing that for a while. Now all of a sudden you're getting sued by Major League Baseball. I don't know. I don't know. We had the football season recently start, NFL. So obviously that's good for DraftKings. Even Morgan Stanley, you can see a little bit more conservative price target, but they're sitting at a $47 price target, which is still significantly higher than where we're currently trading, which of course would bring us to our top trend line there. So I understand where that analyst got 47 from. Raises price target from 33 to 35. Upgrades from underperform to neutral. Okay, so they're staying very conservative. BMP. Yep. But overall, I do like DraftKings, but I wanted to do just a quick update here because obviously the stock, I'm sure, was trending online today and you guys were pretty pumped about this 5% move. But again, it was the overall analysis of the situation for the longer term that, in my opinion, I have to say, I'm not trying to pat myself on the back, but, I have to say, I think is a little bit more valuable than someone, just mentioning a few days ago, oh, DraftKings calls, and then happening to wake up to a 5% pop. But again, I'm not trying to rain on anyone's parade. But if we switch over here to stock charts, we can see the RSI. This is what I was talking about. RSI now up to 68.25, right? So top Bollinger Band here, 41.56. Stock hit 41.98 and then pulled back here to about 41. So tomorrow you may have a little bit more of an up day, potentially trying to get back to that 41.90, 42 level, and then you may start to see the sell-off and the pullback here with the RSI potentially getting overextended, and you might see a nice retest back here to this 200-day moving average of about 39, which, yeah, would be like here. So they might actually bring it down, as I said. They might try to retest this fib right here, 38.68, and potentially meet it up at the trend line with this 20-day moving average of about 38. But then it really should bounce in theory and get back to about 40 plus in my eyes going into earnings. But the MACD has been on the up and up. Obviously, again, we had the big pullback beginning of August, and then the stock's just been rocking and rolling since then. So the MACD crossed looks like mid-August and has been just climbing. But again, if we start chunking down now as the RSI gets overextended, we can potentially curl and have that bearish cross, and that may lead to a further pullback. Maybe you can see something like 37 here, the mid-Bollinger Band. Or if markets decide to go red for a couple of days bigly, you could see the pullback here to the 50-day moving average, 35.55. But again, whether it drops down to 37, 35, or even 32, the bottom Bollinger Band, in my opinion, you know how I feel about the stock, especially if you're able to position yourself for the longer term. And again, that doesn't necessarily mean shares. a lot of people forget you can buy, leap options. You don't have to. When you look at a situation, you don't have to position yourself for that Friday, next Friday, right? If depending on the situation, of course, something like this with a big sell-off, if you did have the capital to buy 2, 3 months worth of time, you can see how much a stock can move over that time frame. And that's why, even with the stock down here at 31, if you want 2 months time, but you're only able to afford, a 42.50 call, you see today the stock almost hit 42. So that's why, again, if I used to always say that, in my opinion, time trumps strike price, especially with something like DraftKings, right? Because it does have a little bit of a higher beta, and it is a little bit more volatile when it comes to the trading scene, right? It's like a mid-range, mid-price stock, kind of 30s and 40s, right? So, that's why, again, in my opinion, if you can see a big sell-off and expect a rebound, buy a couple of months of time if you can afford it, and chances are it's going to work out for you. And on the flip side as well, if a stock is really running up for months and months and you think a sell-off is overdue, don't try to time it for that Friday or next Friday if you can, right? Try to buy 1, 2, 3 months of time, because you may not be timing it perfectly. And right here, after it ran up and consolidated, let's just say you wanted to buy puts, a month or two out, you can see it wasn't done, and it obviously continued to pop up to around 50, right? So that's why initially, in the immediate short term, you may be wrong, which is why stepping in here and kind of blowing your wad on weekly puts and then having the stock spike up again just basically kills the position and potentially destroys your account. And I can guarantee, if you talk to a lot of, smaller traders who lived and learned and went through that experience, they'll probably tell you the same thing, because it always comes down to options. It is very, very rare that you hear about someone who had 10, 20, 50,000 in an account and they bought shares of 3 or 4 stocks and now they have no money. That is very, very rare. And if it does happen, chances are, if you look at the stocks, they're probably overly speculative and probably shouldn't have been bought in the first place, right? So they may have like STEM, but like 3 or 4 positions like that, and they all just happen to tank 60, 70%. So now they're down huge. But realistically, if you were buying shares of some of these growing stocks, some of these brand name companies, right? You got a Visa, Coca-Cola, right? If you mix up shares of stocks like that, chances are it's going to maintain its value or slowly grow over time. And again, the main point of that whole tangent was that that's why it's very dangerous to be 100% options and trying to kind of, outsmart the market. Because sometimes it does work out huge, right? And you wake up and you're like, holy crap, I can't believe that happened. And, the option's up 2,000%. You feel like an animal. I understand, believe me. But again, the best way to burn your account is to just consistently roll the dice with these, short-term weekly calls, short-term weekly puts, let's say, and then boom, you wake up, the stock's up 5%, your whole position is burned. Or if you're having some bad luck and you need a big break, you just randomly roll the dice on some company that's reporting earnings, right? So this is what I mean. Of course, you guys who have that extra discretionary, funds and income, this doesn't really... this isn't really addressed to you. But for my smaller traders out there, this is why I say, in my opinion, work smarter, not harder. And I know we want action every day and we want to see, hundreds and thousands in profit day in and day out. But sometimes that's not the move to make. So sometimes you have to be patient, wait for something like a DraftKings to get beaten up. Oh, now it's undervalued. It's probably going to rally back up. And that's when you strike. And that's when you step in, you buy some time, you just play the rebound, and you try your hardest to, quote unquote, secure what looks like almost a guaranteed move. And again, we have to word it like that because, of course, nothing is guaranteed. But RSI, again, approaching that 70 benchmark here on the daily, so I am personally expecting a pullback, but DraftKings rocking and rolling here. Switching over to the weekly time frame, we can see we do still have more room to go. right? So that's why in the daily we may stop and pause, and we may, hit that 42 and then pull back, like we said, to 39, 38. But over the longer term, we still have more room to go here with the RSI sitting at 56.4. So we're not at that 70 benchmark yet. So that's why you can have a pullback, maybe 2-3 points, and then it could bounce and it can try to go back to that top Bollinger Band here on the weekly, 43.73. And also, again, the stock is technically above that resistance line. So that's why I say even if we pull back, it really should be short-lived, and the stock should continue to rally up to the mid 40s, really. So that's probably, in my eyes, the next stop right there, 43.73. And also we can see that since, looks like mid-April, we had a cross on the MACD here, bearish, and then we curled, flattened out, and have recently crossed to the upside here. So we have a lot of technical analysis lining up bullish momentum for DKNG. So if something like this, you wake up, it's down a point and a half or whatever, in my opinion, that may be all you get. And you may have to step in if you're looking to play it and, step in on that slight dip and position yourself into some calls, give yourself a little bit of time, and then ride that rebound back up to 43, 44, and it should make you a decent return, in my opinion. But I do like DraftKings, and I just want to look one more time. Yeah, see, if we look at revenue, we're expecting an even higher expectation moving forward. So we're looking for another 1 billion about next quarter coming up, and then after that you can see 176, and then rolling into 25 we're looking to break into the 1.3 1.4 billion milestone. So it may not be incredibly consistent, even though it was, but again, these estimates jumped up like 30%, right? So the company, the fact that they're even coming close, in my opinion, just shows that the industry is growing, the company is growing, they're continuing to gain market share, right? The marketing, the advertising that they're doing apparently seems to be paying off. So overall, I do like DraftKings, and this was one that I consistently mentioned in the Discord that, in my opinion, when you do have the dips and the sell-offs in a stock like this, that's one that you should definitely have on your watch list and consider stepping in and taking a position in. But good day for DraftKings, and yeah, quick update. That's pretty much it, so I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain, so I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.